Hello all and welcome to my channel. What if I tell you the ridiculous mortgage rates you're seeing right now, the 5%, the 6%, you can get possibly half or even less that mortgage rate. And it's possible. This isn't no TikTok nonsense, guys. This isn't no quick scheme thing. There's legitimate mortgages out there that you can get, and all you gotta do is ask. These type of mortgages is called an assumable mortgage. Let me give you an example of how this exactly works. Let's say someone's out there right now trying to sell their home for $300,000. You look at the home and you love it, but you're shopping for mortgages and you're recognizing your rates are 5%, 6%, or some people paying even 7%, and it's ridiculous. So you're waiting and you're hoping and you're praying the mortgage rates go down. Well, you don't need to do that. This is what you could do. You could speak to the owner that's selling the home and ask them this specific question. The mortgage you have on your home right now, what is your rate? If they say 3% or 2.5%, this is where you have an option to use the assumable mortgage. But there's some things in it that you definitely need to pay attention to. Now, if they agree, excellent. All you're really doing is simply filling out your paperwork just like you're doing for any other mortgage. But the problem is you're only doing it with their lender. It's going to be a seamless transaction where it just transfers over to you and the owner sells his home and you take over the mortgage. The same payments and the same mortgage rate, and it's yours. I know what you're thinking. What are you gonna do with the home equity? And that's why there's a few things about this that I wanna explain to you that you definitely need to understand. Number one, you only could get an assumable mortgage with a few mortgages out there. One being the FHA and one being the VA. Now, if you qualify for the FHA, then yes, you could do this. You still need to qualify. You still need to make sure your credit is good and everything is on par before you get this assumable mortgage. For a VA, do you need to be a vet? No. You do not need to be a vet, and they offer assumable mortgages. But there's a caveat with that as well. You see, if you are a vet, you need to pay a funding fee, and some vets don't need to pay that, especially if they're 100% disabled. Since you're not a vet, you would need to pay that funding fee. But it could be advantageous and save you so much money on mortgage interest rates. Right now, the funding fee is 0.5% of the balance of the mortgage, so it's not that bad. Now, it's obvious, if there's so much equity in the home, no one's just gonna transfer you over a mortgage and let you get away with all of that equity. That's not how it works. That's why there's only a few sellers that are out there that you'll be able to get this process done. Now, of course, I mean, you might be thinking there might not be a lot, but hey, it's worth asking because some people out there right now got a mortgage and maybe need to transfer to another city and they just got the home a year ago. They didn't have enough time to build up so much equity. Some might be underwater quite a bit. And if that's the case, you can take advantage of that. Some people might just want $2,000, $3,000, $5,000. That's probably all the equity they have. Take advantage of that. You will save so much money on getting a mortgage interest rate so low that it might be worth it to just give them, pay them off the actual equity and just walk away with the house and a payment that you're comfortable with. Another thing you need to know about this is there's no appraisal. So that's the excellent thing about this. If the mortgage right now balance is $300,000 and the home is worth $350,000, you're not getting a mortgage for $350,000. You're getting it for $300,000. Now, I know what you're thinking. That's $50,000 in equity. There's no way possible someone is going to let you get $50,000 of equity. They might. Some people might be in a tough bind and they just want to get out of the house and they don't care about having home ownership and they just say, you know what? You could take it. I want this mortgage out of my life. And you have the house. It's all under your name. Now, even though it's not necessary, you still want to get an inspection. You want to make sure the house that you're buying is fully intact, there's no issues, but you definitely want to do it. Compared to just going a regular route and getting an FHA loan, you definitely need to do an inspection. But for this, it's not needed, but I highly recommend you get it done. Now, another drawback to this, but in the end, you're going to save so much money, is it's additional paperwork. And of course, guys, you know how it is. If you've ever been through a process of trying to get a home, it's a lot of paperwork. Well, now there's even more on top of that. But it's okay. I mean, it might cost a little more to get the paperwork done, but it is okay because you are getting a mortgage rate half. 2%, 3%, way less. And that percent, guys, makes a huge difference. Another thing that kind of sucks about it, but is the fact that you can't go around now shopping for a mortgage. Now you're stuck with their lender. So whichever lender you're assuming the mortgage from, that's the lender you're going to be having all the way until the mortgage is paid off. So if you don't like this lender, I'm sorry guys, but you're going to be stuck with this lender for quite a bit. But it might not be that bad. Really guys, how many of us go out and call out lenders to ask them any question? We never do. So even though guys, like I said earlier, you are assuming someone else's mortgage, you still have to have your credit, okay? You still got to have that on point. Credit score cannot be below whatever the standards are for getting a VA loan or for getting an FHA loan. And let me mention this as well, because I forgot to mention this at the beginning of the video. Conventional loans, and unfortunately, they do not have assumable mortgages for conventional loans. But make sure your credit score is good and everything is on par, and you will qualify for an assumable mortgage. So there you have it guys. No more waiting around hoping the feds drop the rate, that way you get a mortgage. Go now. It doesn't hurt to ask any of these sellers if they are willing to do an assumable mortgage. Most likely they're not going to say no, because it has nothing to do with them. They just want to get rid of the house and want to sell the house. They don't care what kind of mortgage you have. Oh yeah guys, as I mentioned, to hit the like and subscribe. I'm trying to get to 1,000 subscribers, and when you help, I will certainly get there. Good luck.